Welcome to Market View with Ike Iosa and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Well, let's have a good morning. Mike Iosa, your host for Market View. Yes, a very good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
I am doing well. How are you doing?
I'm doing well. I was really looking forward to speak with you today. The reason is, the last time we spoke was about 7 weeks ago, December 4th. And at the time, you had told us that the technical suggested that we were going to get a short-term bounce, but the market looked to be in trouble for the intermediate term. And as a matter of fact, that's exactly how things unfolded. We got a bounce for the rest of December, and early January, the markets rolled over. I'm curious to hear your thoughts. What are the technicals telling us now?
And I know everybody is interested in whether we're hitting kind of the low for the quote-unquote bear market. I am not of that opinion. I am looking right now for some churn moving sideways here, which we've already started to do. Looks like a reverse flag in our opinion. And with today's breakdown from that, today's intraday low is kind of a breakdown of that rising trend of the last week. So even though we are up right now, that is probably, we're going to see kind of back and forth is my thought before we go back down. I mean, I'm looking at a downside target, honestly, of about 380. So
in the SPY,
not a good thing, obviously. I've been telling my subscribers for weeks now to limit exposure. I am currently at about 8%. I don't think I'll be going less than that. I have two energy positions, and I always hold GLD, which I'm actually considering letting go for a little bit. We'll talk about gold a little later, but you know, this is some seriously high volume selling that we're seeing here. And today, I think a lot of it has to do with Apple being up, having great earnings. I think that that's affected kind of what's going on today as far as a positive look. But the indicators are still just soft. They're really not suggesting that this is going to be a longer term rally here. Like I said, I think we're going to be lucky to see a lot of churn, sideways movement, unwind the oversold condition, which I guess would bring us right to the next chart, which I believe is the short-term indicators that we're going to look at new highs, new lows. Yes. So there is a little bit of evidence that we might see a bit more rally here. When you look at the new highs, new lows for the SPY, the S&P, the SPX, if you look at that particular chart, you'll notice that new lows from back in late November are lower. We have more of them than we just recently did on that drop beneath the 200-day moving average. So there's actually a positive divergence going on here as far as new lows when you look at the SPY. The unfortunate thing is that when you look at the new lows for the NYSE, a much different picture.
If I may interrupt you for a second, I was looking at the charts that you sent me a few minutes before I called you, because I saw you had the charts for new lows and new highs. I looked at the intraday data, and as of 10:50 Pacific time, we had at NYSE 7 new highs and 500 new lows. When you consider that the total issues that traded today so far were about 3,400, and 500 of them made new lows. That's 1 in 7. And at NASDAQ, we have like 4,800 issues that have traded so far today, and 1,000 new lows, 1,033 actually. So we're doing about 1 in 4. This kind of ratios between new highs and new lows look to me pretty unhealthy. They are ugly enough to get a fierce rally, but at the same time, too ugly for the market to be healthy for the intermediate term.
Yes, Absolutely. And that's why I really wanted to bring the NYSE, like you're talking about that new high, new low chart, because it's a totally different picture. I mean, we may have that positive divergence on the SPY, but certainly don't have that when you look at the new highs, new lows for the NYSE.
Yeah.
And as you said, it's just getting worse. So, I mean, I just don't see this as a solid reversal area right now. I just don't see it. I think we've got more downside. I think this is a bear market. I'm waiting now I'm already seeing some of our bullish colleagues, the perma bulls, a lot of them have already started to turn bearish, which I rarely see from them. So on the one side, sentiment-wise, I'm kind of thinking, well, when the perma bulls start to get bearish, maybe that's time for that reversal. But I just think economically, globally, there are just too many problems right now. I mean, we could just go down the list of various issues, and none of them to me tell me that this is going to be a strong reversal point for the market. I just don't see it.
Now, our next chart is the Swenlin trading oscillators.
So the Swenlin trading oscillators, a lot of people have been pointing to and saying, hey, well, short term, we're really, really oversold. Absolutely we are. Look at those Swenlin trading oscillators. They are contracting, though. And typically when they start to contract, you start to see higher prices. We're not seeing that really. I mean, granted, we are up today slightly, but not that much. So oversold conditions, I've been talking about bear market rules. Oversold conditions are thin ice. Don't expect those support levels to hold just because things are oversold. In the short term, we're very oversold. But notice that just with even some down days, these indicators started to contract. So they don't need a huge rally in order to leave oversold territory.
Yeah.
They don't. Consolidation, some churn, like I said, that I'm looking at moving forward. These indicators support that, and consolidation will pull these indicators out of these very oversold conditions. But another thing to keep in mind as well is that oversold conditions in a bear market can persist. So again, just because you see oversold readings doesn't mean you're going to get, in this case, a huge rally to the upside. We had higher intraday lows. That was about the best we got this week until today. And you can see that those, like I said, those indicators are contracting, but we're not getting much traction as far as higher prices.
How price reacts to overbought and also oversold readings is a good indication of the kind of environment we're in. If we get highly overbought readings and the market goes sideways and then turns back up again, that's a good indication you're in a bull market. And conversely, when you get oversold, the market goes sideways and then back down again, that's a good indication you're in a bear market. So I think how things play out, how price reacts from this point onward will be quite telling with regards to the environment that we're in.
Absolutely. And if we're going to see a rally come off of this level, we need some follow through on today's action. We need some follow through on some of these days moving up. We're just not seeing any follow through.
We discussed the short-term oscillators. How about the indicators for the intermediate term, the ITBM and the ITVM? What is the message from those?
So last week I used this chart in your viewers, listeners can go to Chart Watchers on stockcharts.com. It's one of their blogs. Last week I wrote an article about evidence for a bear market, and this chart really was one of the main charts that I showed. At the time, we didn't have negative readings yet on the ITBM and the ITBM. And so that was really my thesis, was the fact that we're not oversold enough at this point on the intermediate term indicators. And that told me that we certainly had more downside to endure, which of course this week we did. And now those readings are near term oversold. But I bring you back to the bear market of 2020. And granted, there were a lot of different things going on with that, but you can see that we got much more oversold readings. Maybe we don't have to go down to the same level, but we certainly need to see those readings get more oversold, given we're in a bear market configuration here. So even though these are oversold, again, look back at 2020 at the percent PMO crossover buy signals, that lower window, and notice how long we saw those readings stay oversold. For over a month, we saw oversold readings on that indicator. So just because we're oversold right now, it doesn't mean we're going to get that nice reversal. Like I said, I think we're going to be lucky, get some churn, some up days, some down days, hold this level of support, but ultimately we're going to see lower prices. This level is going to get break down, at least in my estimation.
Now, our next chart is USO, the ETF for oil.
Yes. So I thought that I would talk a little bit about oil. I can't remember if I think I gave you the candlestick chart. Oil has been in a nice rising trend. Every time it pulls back, it hits that rising trend and moves back up. We're in the process of doing that again, testing that rising trend. It's, USO is down today. I think that there's still a good chance, based on the overbought PMO that's kind of flattening and the overbought readings on the RSI, I think that we could see a pullback back down to that October high on oil. But overall, I'm still very bullish on oil. I think that just with some of these overbought indicators, it's time to see a little bit more unwinding of oil. It's been the strongest performer. It's really the energy sector has been leading. It's the only sector with positive momentum right now. So I still think that it's very bullish. But I'm looking at this. I suspect we might see more of a pullback. Technically, that's what I would expect. However, now we have all of this unrest with Russia. And we really don't know how the energy picture is going to shake out, but more than likely it will be higher prices that come out of that. So I still am bullish on crude oil and energy. I just think right now, maybe next week, it has to settle down a little bit, and then we're gonna see it take off again.
And our last chart is gold.
Yes, of course we have to talk gold. Gold is down again today, but I brought the dollar gold chart, so it doesn't have today's price action on it, but you don't need it. We're seeing the breakdown of that rising trend channel, and we do know GLD is down today. I didn't bring the dollar chart, but the dollar looks very bullish right now, and that, of course, is putting downside pressure on gold. We've lost all of those key moving averages. I think we're in for a pullback here on gold that's going to go a little bit further, probably down to that 1760 area, just because I do have that PMO sell signal that's coming together. We have negative RSI. The one bright spot, though, I have to say, when I look at the gold chart is the sentiment, and that is showing those discounts pulling back by quite a bit. And that means when you have high discounts, that means investors are very bearish on gold. And that's a good thing. Extreme bearish sentiment is a good thing because that's usually where you're going to see a reversal. And you can see that. That's what we got in early January. We had those very elevated discounts. But now they're paring back. So that's good and bad. It's good in that investors are clearly feeling a little bit more bullish about gold. The price action isn't following that. So this may be that reversal point on sentiment. You can see back in June, we actually had a premium on the physical gold trust. So we're now to those areas. It says that investors are more bullish, but we're not seeing it in price action. So I've been feeling a little bit more bullish about gold until we broke down yesterday. That to me was kind of a really bad sign. And I'm looking for a drop to about 1760. I think it could hold that level based on the fact that sentiment, like I said, is showing a little bit more bullishness. That might be a good reversal point, but the chart's definitely suggesting lower prices for gold. And like I said, didn't bring the dollar chart, but the dollar is looking very bullish right now. So that's going to make it very difficult on gold.
Erin, anything else you'd like to add?
Well, I would add that you can find me at DecisionPoint.com. We do run a free trial of our products, our 2 newsletters, and all you have to do is use a coupon code DP Trial with the number 2. So DP Trial 2, you'll get free 2 weeks of our bundle package. You can try us out. You can cancel anytime during that 2 weeks. You'll still get the 2 weeks. So that's the way you can see what I'm doing. But also, if you go to my homepage, there's a link to register for my free trading room that I do on Mondays. And you'll find I give you kind of the background, like I just did, of what's going on in the market. And then I take symbol requests. And we look live at symbols. I look at my 5-minute candlestick chart, so I can give you the buy points and the sell points. It's definitely a great time for me, and we're getting a lot of traction with that. People really like that. So recommend that your viewers, if they haven't registered for my free trading room, you just have to do it once. It's a Zoom webinar, and you'll get notified an hour before it starts on Monday.
Erin, thank you. Have a great weekend.
You as well. It's always a pleasure.